Everybody, hey, welcome to this episode of Money Monday. I hope you're doing well, rocking and rolling. Good morning, good afternoon, good evening, wherever you guys are joining us in from. Glad to have you. Hope you all had a great weekend. It was kind of quiet here. I got some rain, which is nice. We're supposed to get some rain today too, as well here. So it's going to be a wet next couple of days here in Austin, Texas. But hey, always good to have you guys here. And I want to go through this deal with you, this case study. One of our one-on-one coaching students got this in a tape sent to him last week from one of the sellers. And I thought, Sunday morning, I was kind of chilling around here. So I did a short little, just a 1-minute video kind of on the numbers and shared it as a YouTube short, as a TikTok video, and some other stuff, just my 1-minute short on Sunday, and it did really well. I think we're up to 3,000 or 3,100 views or something like that on TikTok, which is kind of surprising since, Sunday morning, YouTube 400 views. But I started getting questions about it, about the breakdown on it, and people like overpaying, wanting to I'll give you like 200 for that right now. It's like, that doesn't make any sense. So I thought it was a good opportunity to go through this deal because it's not something you see every day. And I think there's some opportunity in it, definitely. And it's almost kind of like a choose your own adventure. Do you remember those books? I mean, I used to love those books when I was a kid. They're paperback books, choose your own adventure. You read like 2-3 pages, tells a story, then you make a decision. And if you make decision A, you go to page 35. Decision B, you go to 45. Decision D, you go to the last page of the book and you're dead, right? But this one doesn't have a lot of downside to this choose your own note adventure. This one's in Round Rock, Texas. And when he sent me the tape, I was like, hey, he sent me like 4 or 5 they wanted to look at. I was like, this is the one that probably makes the most amount of sense. Now, out of the tape, it was 73 notes. There was only a handful that were really non-performing. Most of these were performing. There was a couple of seconds on there. This was not the only Texas asset, but it was the only one. Actually, it was the most non-performing asset. Let's just put it that way. 14 plus months and no payments. And when I look at the address, of course, when I get a tape in, what do I look? I look at the Texas asset. That's one way to recognize if I've seen the tape before. That's the thing I look for. I look for Texas, I look for Vegas, and I'll look at some Florida stuff. I just remember things. Well, I don't always see notes in Round Rock, Texas. And Round Rock is in my backyard. This house is about 9 miles from where I live. It's about a 15-minute drive. So I drove over Friday afternoon, about 3 or 4 o'clock. And I drove by the house. And this is what the picture looked like when I drove by. This is actually the picture. And I was like, oh, it's a pretty good looking little house, right? Not bad, manicured. It's in a great neighborhood on South Round Rock, just basically across the highway from Pflugerville. Normal. A lot of those houses are, a lot of those brick homes in the neck of the woods. It's not, it's a good size house, like 4-bedroom, 2.5 bath, just under 3,000 square foot. It's got a backyard to it, but the neighborhood's nice. I know this area. I've bought property over in this area before. I was like, hey man, I think you got a nice little deal. I'd submit an offer on this one. So let's go through kind of the things that I found out about it. Okay, let's go through kind of a little bit of quick due diligence and go there. So it's a non-performing first lien, and here's the details from the tape, okay? It's 1 in 73 notes. It's at this point about 16 months behind from what I can tell, but here in the next week, it will be 16 months behind. It said 14 months behind on the tape, the spreadsheet, and when you figure in when that was pulled in June, so July's payment, now coming up on August payments, will be 16 months behind. The last payment made was October of last year. Okay. So it's been, you're coming up July now, 9 months since they made a payment. And that last payment they made in October went to April. Okay. So they were behind trying to get caught back up. And they were basically making a $100 extra payment. Their monthly P&I payment is $900. And they are making a payment for $100 a month. Okay. That estimated the legal balance on the spreadsheet is about 174. I would say it's probably about 175, 176, but for the sake of numbers, we'll just say 174. Okay, makes it kind of easy for us to do some things. Estimated legal balance is 174. I looked at back taxes on this thing. Taxes, there were no taxes due. All taxes are paid up to date. Last year's taxes were $3,000, which is low, and they had a homestead exemption because the previous year was $5,000. But the value didn't go down, so I think they had gotten. I think it was Abbott's tax deduction kicking in and reducing property taxes for them, which is great. No taxes owed, no tax foreclosure. The name on the spreadsheet matched up with the name at the county appraisal district when I looked at that stuff. So great. Okay. The estimated fair market value is about 450. Okay. That's what they shared on the tape. When I looked at Zillow, that's what it said, roughly 450. That's conservative. I could say 450, but you never know with what's going on in the market these days, right? Could be a little less, could be a little bit more. It's hard to say with the market being where it's at. But here in the Round Rock area, you have roughly about a 9-month, about 90 to 120 days to sell in a lot of cases if it's priced appropriately. Okay. So 3 to 4 months to sell if it's priced appropriately. Get a little bit of equity, stuff like that. Okay. 4-bedroom, 2.5 bath, 2,909 square feet. Got a little backyard. The current details of the mortgage is at 5.47% interest. Their P&I payment is $900 a month flat. When you see something that's flat like that, it's like, oh, this has been modified at some point before. Okay. 525-month term. That was something when I saw that, I was like, that can't be right. They have 346 months left. I was like, okay. So that doesn't make any sense to me. You know, they've been in there for 15 years. Yeah, okay, they could have been there for 15 years, but nobody's going to originate a 525-month term, right? And when you look at the tape, when you get further down the tape, it literally shows you keep scrolling to the right in the spreadsheet. It showed that, the original term was 360 months at 11.5% interest rate and $175,000 when they bought this property back in 2008. Okay. And it was, like I said, 2008 origination, $175,000 was original mortgage, 11.5% interest rate that time, 360-month term. I was like, okay, so they modified this at some point along the way, and they did. Okay, but they stopped making payments. All right, they stopped making payments as April. Now, what did I do? When I found that they stopped making payments, I'm like, what happened? Did somebody pass away? What's going on? Well, when I Googled the borrower's name, I didn't find an obituary. I didn't find anything like that. Okay. I was like, it looks like it's stuff. And the lady looks like she's 74 years old based on what I could tell on white pages. Now I have a phone number for her. I did, it's a working number. I called it and it went to voicemail and leave a message, but it's a working number. That's a good thing, right? And the house didn't look like it was, obviously I didn't see a lot of mail by the door. I didn't see trash. It's relatively, I think somebody's living in it. It's hard to tell because they did have a sunshade, like one of those pop-up umbrellas in the backyard, and it was out. So I think, it's on a table. Somebody's been going outside and putting it down. Okay. Otherwise, if it just been stuck up, it would have been blown over based on the wind and stuff that we've had here the last week. So somebody's living in it. It's occupied. Okay. Don't know if it's the bar or not. Probably, hopefully it is, but I don't know what happened. Maybe they lost their job or whatever. But anyway, so what's your strategy? What would you do? Okay. And your first strategy, and we're just going to go through the waterfall effect of strategies. Most of the time you're going to want to, if you're buying a non-performing note that's occupied, you're going to want to explore, is it going to make sense to keep the borrower in it? Okay. And let's go through the numbers on this. So the borrower is 34 years, still alive as far as we can tell. You buy the note at 80%. Okay. Here's the thing. There's a ton of equity. I mean, they only owe 175, and if its value's at 450, they're at like 38, 39% of value. Bidding anything below 80% is really going to be too low a low ball bid. It's not the same thing as bidding at 70% where they owe more than the property. They owe a whole lot less. If you bid less than 80 cents on the dollar, your bid's going to get outbid because somebody like me is going to be happy bidding at 80%, and I'll share why. Okay, I might even get outbid at 85 or 90%, depending on what the person's doing. Okay. But basically, if you take 80% of legal balance at 174, 175, it's about 139,200 is the purchase price. Okay. Now, if you want to have the borrower reinstate the loan, they were paying $1,000 a month till October 23. That's the thing to keep in mind. Okay. What happened? Can you get back on track? So can you just start paying your normal P&I payment? $900 per month times 12 is $10,800. 10,800 divided by your 139.2 is only a 7.76% cash and cash return. I'm not going to go through and calculate all 500 or 346 months because there's no way I'm going to plan on keeping this that long. Okay. Not going to let this out for another 30 years. That's not my goal with this. Okay. My goal with this be to get them to refinance out or do something. But at 5.4%, they're probably not going to refinance with the rates being like where they're at right now, right? Can we agree to that? Motivation to refinance you out is not very, of course, they're out of work, they've missed payments. So the traditional refinance isn't going to be normal. I'll cover something in a second. It's an alternative, two different alternative strategies for that. Okay. So that's not really exciting. 7.76%. Okay, you hold on to it and maybe you sell it off at par in 12 months. That's not a bad day, right? You get 20, you get 34 grand at the end of a year. That could be a pretty good day. But the cash and cash on this one, that's the hardest thing to keep a look at. Now, if you get $34,000, and I forgot to calculate, this is one thing I forgot to calculate. So you get the cash flow, the 10,800 coming in. They start making their payments for 12 months, and then you turn around and sell it at par, try to get somebody to buy it off your hands at roughly par. That's not going to even work there because it's at 5.47%. That's going to be a low interest rate. I just don't think that's a desirable a strategy on this one. All right. So, but if the bar does reinstate the loan, like you said, listen, can you bring money to the table? Can you cash out retirement accounts? Can you cash out something to keep the house? I need you to bring the full amount due in the next 12 months. So if they make their $900 a month payment and it's 16 months, figuring in August payment, 900 a month times 16 months, that comes to 14,400 in back payments roughly. Okay. If you add in a year, because you hold this for a year of 10,800, they're 900 a month. So you're basically collecting 28 months of payments, right? Okay. So that comes to 25,200 and collected in the first year to reinstate the loan, to make up the rearages all in the next 12 months. That comes to an 18.1% cash and cash return. That's pretty good. That's not so bad. They're reinstated. It's performing. It's great. It's 18% year one, and then it's going to drop down to 7.76% year two. Not very desirable, right? I mean, if you could sell it at 85 or 90, then you're going to get a chunk of some cash, after selling the note, and that would be great. That'd be a nice boost to get this thing off your books, and get some cash flow and a little bit of chunk of equity, and the borrower stays in their house. Okay. But here's the realistic aspect of it. Do I think this borrower can stay in their house? Do you think they can stay in their house? And I apologize. I have been talking and I forgot to enable the chat roll for you guys. So let me go in here and enable chat roll for everybody on here. Okay. Do you think they would be able to stay in their house to keep the payments? Nope. Exactly. Thank you, Phil. Me neither. I don't think they could logistically bring that money to the table. Otherwise, they would have. Okay. Now, let's move on to the different route. So the thing is, reinstatement is really not an opportunity. I don't think it's going to happen. Okay. Now, let's talk about borrower refinances, because with all that equity, could they refinance? Not your traditional 30-year mortgage, they couldn't. But here in the United States, the borrower being 74 years old is a positive thing for them. Okay? Exactly, Phil. They could do a reverse mortgage. Okay? You're buying the note at 80%. That's $139,200. Have the borrower qualify for reverse mortgage. All that equity is a good spot. They're over 62. That's a good thing. A reverse mortgage is not based on credit, so it doesn't matter that they're behind. So they go get a reverse mortgage because their current LTV is only at 39%. So maybe they get a reverse mortgage for 75 or 80 cents. Maybe they can get a full 80% of their value, refinance this out, and they get some cash put in their pocket, and they ain't got to make mortgage payments for a while. I think that would be a great win for them, right? Borrower age qualifies, the equity amount get paid off, so you get $175,000 minus your $140,000 purchase price, roughly, give or take. That's $35,000 in profit. Okay, that's not bad, right? 35 divided by your $140,000 borrowed amount, probably 140 what you paid, roughly 139.2. We're just going to round it up there. So then that's about if you annualize that 35,000 divided by 140, that's a quick 25% cash and cash return. Now, if that took you the whole year to do, that's 25% ROI. I don't think it would take like full year. If you did it in 6 months, which I think is more of a realistic aspect, maybe even 3 months, give or take a little bit. But that's a 50% cash and cash return if you annualize it out and you make 35 on your $140,000 investment in 6 months. That's not bad. That's pretty good, right? Now, obviously, if you didn't use your own funds and you need to borrow money to do this, because to buy this note, it wouldn't take a lot of money just to get them to qualify for it, just to go through the reverse mortgage. Hey, you have that come to Jesus meeting. You're going to have some servicing costs, a couple $100. But that's okay. But if you are borrowing $140,000 in Texas here in that's going to be Williamson County, I believe. Williamson or Travis County would be about $1,500 to foreclose if you had to. Okay. But if you borrowed $140,000 at 12%, the full year of interest cost would cost $16,800. Okay. But if you only needed it for 6 months, then your money cost for the 6 month on that would only be $8,400. So that's a pretty good, worst case, if you had to pay a year of interest for 1 year prepayment penalty, that's still an $18,200 profit. Actually, to you, that's infinite rate of return because you don't have any of your own money into it. If you only had to pay a 6 month interest or a 6 month prepayment, which is probably what some folks may want at 12%, then you're still going to walk away with 26.6 or 26.4. Or no, 26.6 is actually what it is. So that's still not a bad day, right? Okay. Is that right? Yeah. 26.6. So that's a pretty good cash and cash return to you on that if they refinance that into a reverse mortgage. And that's a good thing. I mean, I don't want to steal anybody's house, but the whole point of this is, hey, I don't run a charity. If something bad has happened, let's help you find a solution and get this taken care of. Okay. Now, let's say they don't respond. They don't want to do anything. They're hiding. Maybe she's sick and her family doesn't want to respond or something like that. Whatever. The borrower's still 74 years old. You're buying the note at 80%, 139. Your max legal bid is going to be your payoff. And right now it's at 175. So we'll just say 175 to 180. Okay. We'll just say at 175 after some holding costs, stuff like that. You're going to sell it at auction. Same thing. Your ROI is pretty fast. I would say if you had to foreclose, you could do it very quickly because here in Texas, it's fast, right? 21 days. If you bought the note today, you wouldn't be able to foreclose next month because we're within that 20-day period. But you could technically foreclose in September if you bought the note and closed on it before September rolled around. Well, in a 3-month annualized time frame, you did that in 3 months. You made 35 grand on it. That's 100% cash and cash return if it's annualized. Same thing. If you borrowed money, it breaks it down to, your 6 month, your 1 year money cost, stuff like that. So you're going to profit somewhere between 30 and 30,800 if it's in basically 90 days, start to finish, all the way down to 18,200 if it took a year. All right. So if you foreclosed and you got outbid at the auction, which is what's going to probably happen, you're only at 38, 39% of the value, you're going to probably get outbid. Now, if you don't get outbid, that's a good thing. You end up taking the whole property back, right? Somebody asked me, well, I'll just bid above what's owed to take the property back. That doesn't make any sense. You as the bank wouldn't do that. I mean, you could, but that money's just going to go back to the borrower. And then you've got to go through the eviction process and stuff like that. You might as well take opening bid's 100 and then go to 175 or 180 where the legal balance is at that point and just see if somebody's going to bid. If they're going to bid, great. If they don't bid, guess what? You take it back. If they bid it, great. Let them do it. You take your profit in your pocket and get the heck out of Dodge and move on. Now, you could do cash for keys. This is one thing that you could do prior to the auction. Okay, let's say, the borrower's trying to get, we'll go through this a little bit. Idea behind it. Let me explain a little bit more. Cash for keys or letting the borrower try to sell a house. I don't think letting the borrower sell a house is the right track, but I'm going to throw this up because somebody asked me about this. Okay. If somebody like this has equity and a ton of equity, here's the thing I'm going to go. If they say, oh, we're going to try, can we have an opportunity to sell a house? I said, tell you what, here's what you can do. I'm going to give you the opportunity right now. I own the note. I will offer to buy this house from you for 70 cents on the dollar. This offer is only good for a little while. Okay. That means I will give you $315,000 cash, which you're going to have to pay me off. my 175, 180, but you're still going to walk with some cash. Okay. Now, if you try to sell this and drag this out, stuff like that, I'm not going to offer that up after 30 days. Okay. That's my highest and best offer to you right now, $315,000. I'll take the house from you, let you move on, put some money in your pocket. You're going to have $130,000 cash in your pocket to do some stuff. Okay. Now, if they want to, so go, okay, go ahead, but don't list it more than 425, because if it's the appraised value is at 450, trying to list it at 450 is a dead man stupid thing. I'm like, I'm going to foreclose. List it at 425. I'm going to tell you right now, you need to reduce it by, if you don't get any traffic, you need to start reducing it by 10 grand every 2 weeks. Okay. Because if you're at 425 in 4 weeks in a month, if you don't get any offer, you should be down to 405, 395. And that's when you should start seeing some traffic. If you don't see any traffic, then, like I said, I'll give you cash for keys. I'll give you $315,000 cash. Pay off it off, so I'll give you $135,000. Now, would I go back to my note investor and take the $315,000 from him? No, I probably would not. At that point, I would just sign a contract. We've bought the note. I'd have another entity buy that property from them, but I would go get a hard money lender to borrow the $315,000. Okay. Okay. Because basically what's going to happen, they're going to pay off the underlying mortgage, and the hard money lender will be in a first lien position at that point. Okay. So that puts basically $135,000 cash in the bar, let them move on to do something else. If they're 74, they probably don't need to be in a 4-bedroom, 2.5 bath house by themselves if they're not getting any help. Okay. Borrower walks $135,000 cash. You do what you want with the property. You sell it, you rent it, you own or finance it, you keep the property, you move the hell into it if you want to. The rent rate is $2,600 a month based on rentometer. Now that, there's some around the property that are smaller square footage that are less rent. There's some around it that are larger than rent. So that 2,600 could be $3,000 a month or just under $3,000 a month, somewhere right around there. Okay. So I just wanted to show you kind of that there's the rentometer kind of map posting. And you see the red dot or the orange dot right here is the subject property. So you see, some in the blue are a little bit more. The one in the green is down below. The green is at 2,200. So your rent is a little bit all over the place. Anywhere from 2,200 to $3,000 would be about as high as you can get it. Okay. Now let's talk about foreclosure. Okay. So borrower 74 years, still alive. You buy the note 80%, you're paying $139 for it. The max legal bid is $175. You sell at the auction, you make a quick profit. Here's the risk you run into. Borrower could file bankruptcy, a BK Chapter 13. Okay. And that's going to drag this thing out at least 90 days, approximately going back and forth with your attorney. So on a BK Chapter 13, it would be a 5-year payment plan to pay back payments. So they would take a look at the $15,000 or $14,000 they're behind on, and what's your plan to pay that back in 60 months. Okay. Now they've got to keep paying the existing underlying payment, but they haven't done that. And so the borrower would be making the $900 a month payment plus some. So if you take $15,000, let's just do that. $15,000 divided by 60 payments. 15. That means paying $250 a month. So 250 plus 900. So that's only 1150 divided by 140. Yeah, that's really only bumps up to like an 8.2% return if they file bankruptcy. Okay. So that's why it's really in your best interest to work with a borrower to do something like, hey, I'll give you some money to walk. We can't keep it. You trying to sell the property now is not going to work because of commissions and stuff like that. Okay. Now, if they filed it, we would just have our servicing company. You have to hire a separate BK trustee on your behalf. And we'd have that BK trustee on our behalf say, listen, go to the judge, say, we want to have them discharge the bankruptcy because they're not making their existing payment. This loan was previously modified. And we would look at the loan docs to see when it was modified. But it's a previous modification of failure. We've offered them cash for keys to walk. Let's just do that. I guarantee if they're behind on this mortgage, they're behind on a whole lot of other things. So that cash offering at $315 might be very attractive to be in and out in 30 days and done with it. Okay. Now the question is, what would you do? All right. Same thing. If you go back here to this, I mean, If they discharge it, then guess what? Then you finish the foreclosure process. They kick it out, you finish the foreclosure process, and then you run your risk at the foreclosure auction again of either getting your max bid or taking the property back and going that route. Do what you want with it. Does that make sense? Did I help answer your questions on that? Anybody? Does that make sense for everybody? Yeah, I'd go for the cash for keys too, Don. I mean, obviously, the first thing would be to approach the borrower and say, "Hey, what's going on? You know, were you sick? What's your country western song? Well, then let's go. The best thing for you to do is go. Let's go get you a reverse mortgage. Okay, let's get your reverse mortgage. It's based on the equity. I think you'd almost be a slam dunk for a reverse mortgage. Okay, and then you get refinanced out. All right. If not, then the cash for keys. Yeah, that's what I would do, Don. And in the market right now, I mean, I had to look at. I didn't have a realtor pull comps to look at days on market or stuff like that. I mean, I just know kind of what things are moving at based on what I talked about in that price range, that 450 to 500 price range. That's on. Anything below that's really moving fast in this market because it's for the first time home buyers. But you 400 to 450. That's the median home price here in Austin. You got a lot of home builders building stuff that are giving incentives and lower interest rates, stuff like that. So it's a little harder aspect. You're competing with those new builds in a lot of cases in that price range here locally. But look at it this way. Worst case, I mean, you foreclose, you're going to make 35 grand. And, I would you dismiss it. I would approach the borrowers, the borrower, man, I know that you've gone through some sort of financial hiccup. What's going on? Let's try to create a win-win here. I can't let you just start making the payments again. It doesn't make sense for you. You've got to have a come to Jesus meeting with us. Cash for keys, deed and loan. Let's give you some cash. Go that route. Okay. Any questions, concerns on this deal? Not a bad deal, right? I mean, that's a great thing about when you're buying notes like in a fast foreclosure state like Texas. Equity deals can make sense. They don't always make sense, but if that $400,000, $500,000 range and a low, 80% LTV on this one or of legal is not a bad deal. 35 grand is not a bad day to be in and out of the deal in a lot of cases. Now, we did a case study, a few months ago where we talked about $1 million home out in Lake Travis that they owed a chunk more change. And that was a six-figure at 80 cents of the dollar. So that's why when it's got equity deals, when you've got that huge value above what's owed, you really can't be going at 65, 70% of the legal balance. You got to look at the numbers and realize you're probably going to get outbid. I mean, 80%, there are even people trying to get 80, 85, even 90 now, depending on where it's at. I like to stick with it. You got to be there just in case, because your money costs. Now, if you're using your own funds, that's a different story. We can all agree to that. But if you're using other people's money, you got to protect your investors' money. And you can't be doing like the 7, 8% these days. I mean, you can if you're going to be aggressive in your outreach to investors, to IRA investors, and talking with people and asking them what they do. I had another coaching student call me. I got a note investor who's wanting to fund this deal, but he doesn't want to do it for 8%. I can't get anybody to do 8% because of all their note investors. I was like, that's because you're targeting note investors. You're getting note investors to respond to your marketing, and that's great. They're responding, but they don't want to do 7, 8%. They want to do 12. You need to target these IRA investors out there that have money sitting on the sidelines. They're not doing anything. With 8 to them is attractive because they're not doing anything. If you got somebody who's actively putting their money to work, 12%, 10% is probably what they're going to want. All right. Or they've got stuff tied up in shorter term stuff, or, they're used to making it 7, 8% because that's what they want to as the risk aspect of things. Okay, that's great. But you just got to understand the conversation. One thing doesn't, one stamp what you did 12 months or 24 months ago, you're going to have to adjust and evolve. When interest rates were low, you could get away offering 6 to 7% because people weren't making that. So that's what you have to understand. And that's why that conversation is, what are you investing in? Oh, I want 12 to 15% of my money. Well, then you're not a fit for what we're doing. Okay. Any other questions, comments, concerns? Was this valuable, guys, for me to go through that with you guys? Did you like it? Yes, no, thumbs up, thumbs down. Love it. Good. Now, if you got a deal and you ever want me to go through something like this with you guys, please reach out to me. I'm always glad to go through. Hey, Crystal, good to see you. How's everything up there in the land of green birds? Oh, I think everybody's ready for football season. I know I am. I know that I am. Good stuff. All right. Well, if there are any other questions, comments, concerns, anything like that, ladies and gentlemen, let me know. I'm glad that I'm here. I've got a busy, pretty full day. I'm kind of surprised. Here's the thing that I really want to put out for you, Mike. I'm not, I know that it's funny with all the chaos that's been in the United States here with the politics of Trump and then the debate and then Biden leaving Sunday and all the uproar going on with the Democratic Party and the Republican Party and all that stuff here. One thing, if I can tell you anything, is just learn to mute people. There's a lot of dumb people on both sides up there talking about it. The most funny thing is watching the memes from both parties, but there is a lot of hate. There's a lot of vile going around. Focus on what you can focus on. All right. I'm a big believer that everybody has their right to their opinion. That's what makes our country great. But if you can't sit down and have a conversation and listen and be able to have a contradicting opinion, that's your choice. But if you can't do that, then you have the issue out there. And it may make sense to be muting social media for a while or focused on just one thing. And I wanted to share, I've been getting a lot of comments, a lot of people following me with my 1 minute video a day strategy. And I got this strategy 2 years ago, but I was in, where was I at? Was it Orlando? Yes, it was Orlando 2 years ago for FinCon. If you're creating any type of financial content, you're in the finance, coaching, or real estate space or investing space, you might want to look at FinCon. FinCon is taking place in Atlanta in October. It is a phenomenal event. And I walked in that event just about 2 years ago. And there's a lady out there, she talked about how she started her TikTok or her YouTube channel and was just doing one little short video a day. And I was like, you know what? I do a lot of longer form content. And people are always like, you need to do some short form content. It's like, okay, I'll do a 1 minute video a day and I'll do it on something real estate. Now I started off with FAQs and the tip of the day or motivation, and they did okay. And I started sharing that on YouTube Shorts and saw some viewers on that. And I started sharing on TikTok just because why not? If I can, TikTok, it makes it pretty easy to record and then download it with captions and then reshare that everywhere. Now, some people say you shouldn't reshare your video. I'm like, I don't give a rat's ass. But the thing is, by sharing 1 minute video per day, everybody's got a minute to record something and throw it up. Even if it takes you 10 minutes to record it, throw it up, you all do. You've all got knowledge. You've all done a ton of deals, a lot of experience. I don't care if you're here in the States or north of the border or whatever. There's a lot of great investment stuff, but we're really starting to see a lot of interaction. People responding, people, and I'm not like dressing up in costume. My younger brother likes to do a lot of Comic Con stuff, so he's different niche. No investing, real estate investing is a niche, obviously, out there. And it's not the biggest niche on TikTok, but there's still a chunk of people out there that are paying attention. And literally from doing the Round Rock video, doing a short 1 minute video and a couple other things about some of these notes, these apartments that are going to foreclosure, my calendar is starting to get full up. I think I'm booked from the time I get off the phone with you guys today through 5 o'clock today with people who have either wanted to learn more about notes or talk about investing or other things when it comes to real estate. So it's something to think about as a lead gen. Everybody that's, reaching out to me, they're going in my database, and it's been a great way to add. And I don't have the hugest following. I'm at like 3,700 or 3,800 followers on TikTok, but that's gone from like 700 a month ago. So I'm just seeing success. You don't have to have huge numbers, don't have a huge following to start adding some, growing your database. It's one thing you need to do, growing your investor database. And this, that 5 to 10 minutes a day that I spend doing that 1 minute video, it literally works all day long and works across all the different platforms. So something to start keeping in mind. Pretty simple to do, but it will get the word out what we're doing. If you're all looking to raise capital or learn it, get the word out what we're doing. Share about previous deals, current deals, thoughts of the day, articles. There's all sorts of great content for you guys to share. Start getting people to notice you. And we're all looking to raise more capital and close more deals. So start taking advantage of this low-hanging fruit that you can use to leverage your business, your expertise into more deals, more funding, or other things. All right. Any other final questions, comments, concerns before I let you go today? If you got a deal like for me to go through like something like that, let me know. I'm glad to throw it up on a case study and go through it like this with you guys on a regular basis. These are always fun. Doesn't take me long to do. If you got something here in Central Texas, Austin and San Antonio, I don't mind driving by it. I'll drive. Sometimes I'll take an hour drive. Drive the toll road and get my Hemi up to 90 miles an hour, and that little rock and roll is a good day. So. All right, everybody, with no questions, comments, concerns, thank you so much for listening, for watching this. Feel free to share it if you're watching the replay of this. Make sure you hit the subscribe button, and we look forward to seeing you all at the top, everybody. Have a great day.